Welcome, traders. My name is Adam Harris, Chief Market Analyst, and this is my look at the global markets, well, actually the financial markets, for the week commencing Monday, the 16th of September. So there we go. We've hit our midway point, and we're obviously just storming towards the end of the year, as crazy and depressing as that might sound to some of you. Some people love summer, some people love autumn, but what are you going to do? So what I'm going to be focused on, the U.S. economy is still doing fine, not too worried about that. There will be discussions of rate cuts, so we'll be having a look at that. If there's that, it's forecast to expect a rate cut this week. So what is that? Traditionally, what should that do if the market follows the fundamental rules? It should weaken the US dollar, so we would expect to see that US dollar weaken. The thing is that the US dollar is overextended to the downside and is actually due for a bit of a correction. So we've got a little bit of that playing out. So we might find that the dollar does nothing. And honestly, it's one of those things where it's difficult to work out what it's likely to do. But let's just go with the fundamentals for now. Traditional saying that it should potentially weaken the dollar. Now, we've got CPI data for the UK and for Europe, so I'll be having a look at that as well. What I'm looking to see is that we are stable, flat or growing, but not dropping in any way there. We've got the interest rate decision for the UK, which is looking currently, still wants to get some inflation under control. The US is leading the world. The UK is still lagging in that respect and needs to do it, so we'll see. I'm not expecting any changes there. And then we'll get some feedback about the state of the UK economy. That is really it. And right now, the sterling has been pretty strong. So this week, we could see the dollar drop. We could see cable climb, but let's go to the charts and have a look and see what is going on there. Okay, so we'll start off with the volatility index for the S&P, and so far you can see it dropping back down to these kind of lower levels, just implying effectively that whatever volatility was experienced recently in August isn't really kind of, we're not really there at this point in time. So even for September, which is historically more volatile than most months on average, we seem to have had a minor little bump and we're back down where we are now. So the question is this a sign of increasing spikes to happen? No, it's too soon to say that. And really, you can see that overall we're still operating at incredibly good levels, incredibly low levels. So the market is happy. And then, of course, if we go across and have a look at the dollar index here, you can see it's trying to turn around. We've got that bullish divergence. We had a little bit of a double bottom with a little bit of a bullish candle here. We couldn't break above the high, so there's no change in trend. So right now it looks almost as though we're sort of consolidating, going sideways. We are at the bottom of the range for the dollar index. It is, if it was going to rebound, I would have expected it to rebound by now. So we might see this week, that dollar index break down below the low here and outside of this range. But until it breaks out and closes out, it is still qualified, technically still contained and qualified. I would qualify it as still stuck within that range. So that's a very important thing to recognize about ranges. You're in it until you're not in it anymore, and we're still inside it. So let's see what happens. We'll have a look at euro dollar here. So euro dollar has pulled back on the weekly. Very strong rejection a couple of weeks ago. Then we sort of sit here. We found some support. So based on what I see here on the weekly, it's fair. It's not impossible that we could, make these trending bullish. We could see, especially if we see a break of the high of last week, we would see a continuation to the upside, which supports the idea here of a weaker US dollar. But we still have a downtrend on the daily. So just be aware that Friday finished with a little bit of a bearish rejection candle. So we've got a downtrend on the daily with a bearish finish. We've got a potential bullish setup on the weekly. So we've got these conflicting signals, and therefore we need to see what's going to happen. And again, it's not necessarily a surprise that this also could potentially come to a head with the Fed talking about rate cuts. Let's have a look at the pound sterling, which is also going to have a similar discussion this week. Here we go, a bit of a gravestone doji, also another little bit of a doji this week, so also adding to that. But the difference is I think here we've got the pound is generally stronger against the US dollar than the Aussie is, and so therefore it just looks as though that has a good chance of continuing. Aussie dollar here also looking like it really does want to break it to the upside. Also nice bullish candle here. So again, we're setting up here that if we break the high of this, we could see a follow through, and a weaker US dollar would support that. Same thing here with that Kiwi. Yes, that's not a very strong bullish candle. It is bullish, but it's not super strong. It's sitting here testing resistance, could be finding support. And again, it's within a range. So here, even if it does break up and head up to the upside, which would support the idea of a weaker US dollar again, it's still within a range. Okay, then we have a look at dollar yen. So dollar yen continues to trend low. This is really good. This is pretty much in line with expectations. We know that the Bank of Japan wanted to change that direction, and right now it seems to be supporting that idea. So fundamentally and technically, we have the charts supporting the fundamentals, which is really good, because that isn't always a guarantee. Because if it was, then fundamental analysis would be really easy and lots of people would make money doing it. So Here we have dollar Swissy coming down to a key level of support, potential for a bit of a bounce here, but again, this would need to have the support of the US dollar to be able to do that. If we have a look here at Canadian dollar, we've had that big strong correction. We've come back up. We're testing support for resistance, and we could see a continuation to the downside. So there's quite a bit with each of the charts all looking slightly different. There's lots of different things that I would want to take into account there. So looking at gold, we've had a continuation to the upside. And again, from that weekly. So last week, my expectation was to see that we would kind of have a bit of a correction to the downside if indeed we saw a boost from the dollar. Gold actually came back into the moving averages and has continued to push higher. The monthly continues to be overextended. We've seen it before, but it continues to be overextended. But on the weekly, it still looks okay. And on the daily, it still looks okay, even though it's had a nice little consolidation breakout here. All of this in isolation looks very nice and bullish. So it really does lean towards supporting a bullish, that gold will continue, even though I keep saying that every now and again, I know it's overextended and I know it needs to correct. It still seems to be able to continue to move higher. So that's fine. The silver, I'm looking for a break of this, which is what I was looking for. But look at what we have here on the weekly. We've got an uptrend on the weekly. Silver looks really good. We've had a pullback here. We look really good. So this week, look, this is a key level. We do need to respect, because you can see it here. So we do need to respect this key level here. But I think we're through that. And so I do think silver is definitely worthwhile taking a gander at this week for continuations to the upside for sure. Let's have a look at light crude. So light crude has broken to the downside. We saw a little bit of a bounce off that 65 level. And you can see here from a daily perspective. So let's just go ahead and have a look at this on a daily. Here you can see we had a nice break to the downside. We pull back into the moving averages. We have produced that bearish candle. So we could see a continuation to the downside here. This is really what I was looking for here. So I'm just going to remove this because it's unfolding at this point. So we could see a continuation to the downside. Will that be the case? Again, I'm just going to see ultimately it does look and appear to be a little bit bearish. So based off of this bearish candle, this is often would be a potential bearish setup. So let's see if that's going to be the case. Then moving on to so that's light crude. West Texas will be the same, and again it's sort of close to the bottom of that range. Then let's move on to the global indices. Okay, so wow. So again, I was looking for a correction this week. We did. Sure, technically we had that correction, but we had an incredibly strong rebound. So Monday, Tuesday, bit of a drop. Wednesday, Thursday, Friday, right back up at these all-time highs. So you can, what does this tell you? It just tells you there's so many buyers in this market. It's so bullish. There's so many buyers. This is a very strong bullish candle. And certainly we're now halfway through September, and if we head back down this week, then that, we're going to just see a spike in volatility. But definitely we are, there's no shortage of buyers in the market this week just because that continued push. But this is the kind of thing as well that makes me a little bit edgy when the market is going to be swinging wildly. So again, my point here is the market has recovered incredibly well this week, better than I expected, which is rare that it had such a strong rebound so quickly. So interesting. It still makes me wary because exactly that kind of behavior is still tricky. So again, yep, absolutely acknowledging that the market is still very, very strong. We could see this rebound as well with the S&P, also just such a strong one, and the market producing all these wicks. But again, technically this is a hanging man. So I just really do want to be cautious, not to say you guys need to be. If you're very bullish, keep going for it. And if you're very skittish, then I'm not trying to inject any more nervousness here. I'm really just saying until we get free and clear of September, I'm going to just keep, keep my mind open to the idea that we could still have a deeper correction. But overall, I have to say that was just such a strong reaction, and technically, it's very bullish. So my mentor would be saying to me, well, what does the chart say? The chart says the market is bullish, and therefore we would expect it to continue higher. So what I'm going to do here is, this was a head and shoulders that I was looking at for it to potentially, if we broke this low, we didn't break the low. So this head and shoulders pattern is not significant at this time. We can move on from that. So let's have a look at the Russell 2000. Also continues to look really nice and bullish. So a lot of buyers this last week across the board. The FTSE as well. Let's just adjust this and just move it across there. You can see also buyers stepping in. We've got the DAX, also very, very nice recovery, also looking really good. The weekly is just such a great way to kind of identify what's happened in the previous week and where the next week is likely to go. The ASX out of Australia also continuing to push higher. Just notice those monthly candles, just the shape that they currently have. It's pretty common at the moment. And then we had a little bit of a recovery here on the Nikkei. Could lead to a potential higher low. And this is one of the ones that had one of the biggest corrections, obviously. I know that right now China is feeling a bit of pressure with its markets. They're not going the same way that the US is in terms of that. So their economy is taking a bit of a strain. It also could be tied potentially to the relationship with China. I mean, with Russia, I beg your pardon, so I'd be curious to know, but there's a lot going on there. We need to be keeping an eye on that. That could be something that ultimately does start to impact the global economy down the road a bit. So here we go. We've got a bullish candle here. This could lead to a swing low. We could see another move up this week. So I'm still cautious, but the markets technically are looking really nice and bullish. Look at this one. So Anheuser-Busch, this is Bud Light, looking as though it's working its way steadily towards that monthly breakout to the upside. Now it's starting to look more and more bullish on the MACD. Looks pretty good. This was a very nice breakout here. So if you haven't seen every episode, over the last couple of episodes, we've been talking here about a bullish breakout pattern that occurred on the daily time frame, while there is also at the same time a bullish breakout pattern forming on the monthly. So this is really good. If you had taken this, this would be on its way to a 3-to-1 or not, depending on your entry above the high, stop loss below the low, most recent swing low here. With your stop loss was here or here, you'd be at a 3-to-1 already, which is the goal. Remember, it's always a 3-to-1, ideally nothing less, and a minimum of 3-to-1. Apple, producing a now bullish candle, so this could in its own way ultimately lead to a new swing low. So let's see if that is the case. I'm in a market, I'm still cautious, as I said, till we get past September, so I'm going to just mark that, but I find that interesting. Will that ultimately turn out to be a little bit of a swing low? Then we've got Amazon looking very nice and bullish. Beautiful. A breakout, retest, bullish candle on the 10 and 20 moving averages off a level of resistance that's now support. Very, very nice. So I think that's worthwhile. It's a monthly. Obviously, it's an inside bullish candle as well, but so far looking pretty good. Then we go have a look at AT&T. Continues to move very bullish, very strong at the moment. This is, AT&T's had a bit of a rough period for a while, but it is really on fire at the moment. ARC is trying to work its way up to the top of its range. It's fine. It is still range bound, so let's leave it there for now. ASML. Very nice, strong bounce there. Also here, it's had a really nice correction. This is look at that beautiful, crisp reaction off this level that we put in. And so let's see if it can recover. So what it needs to do now, ideally by the end of the month, is finish with a bullish candle. But let's see if we can break higher, work its way back up to these previous highs. Glencore here trying to find support at this level, did break out of the range. And all I spoke about last week was that, yeah, this was a previous break, but the range was actually this high level. So let's see if from this point it can get its way back into the range. Tesco heading up towards past 360, so I had it at 350, went through 360, really just on fire. Look at the little bit of a daily correction here. So this is the first one it's had since August, and so let's see if we do start a bit of a correction here. I'd love to get in again at around about that 330 to 340 level. Amex looking good, very nice trend continuation, weekly candle, bullish engulfing off a level of resistance, finding support. Yeah, also looks good. Let's see Berkshire Hathaway pulling back in. Beautiful. Would be amazing to find a little green bullish candle to form in this area in the coming week or two. Let's see if that's going to be the case. Coca-Cola. A little bit of a retracement here. We've broken the low. We've still got a bullish candle here. You can see this daily already trying to find support here with a bit of a double bottom pattern there. A messy one, I grant you, but a nice little double bottom and overextended. So this really does need to have a correction. Let's see how that goes. BP breaking out the bottom of the range. A little bit of a buyer's reaction there to finish off the week, but nothing really there. Exxon back in the middle of the range, so nothing changes much there. Estee Lauder trying to turn out, but again, you could just see the wicks forming here this week, but no real change just yet. Very bullish divergence, but no change in trend just yet. And this is similar. If you recall, whenever I've looked at natural gas, we've had similar types of patterns. Continues down. Here is your double bottom. I've been talking about natural gas trying to turn around for absolute ages. Bullish divergence. Here's your double bottom pattern. We should be turning around. We've got a nice little high over here. Once we break above this, we should see price starting to move to the upside. But we've had that happen before, and then it double topped and came back down. So let's just see how that ultimately plays out. General Motors double topping up here. Nice little correction and trying to just stay where it is. All right, so nothing amazing there. JP Morgan Chase, really nice correction. Back down, we could still have a bullish candle in this area. Even if we move down to these green areas, it's still a buy in my mind. Remember, at that point, all we're getting is a monthly retracement, which is what we would get every year if the market was, guaranteed to behave in an identical fashion all the time. But anyway, here would be good to get a nice bullish candle. Okay, Invesco, QQQ, also looking good. Very nice bullish candle there. Could lead to a higher low. Again, the only concern I have is with these hanging men patterns that form often at the end of a trend and they lead to a bit of a correction. Is it possible that we could get a correction in October instead of September? Of course it is. This could be one of those cause and effect things. Everybody was anticipating September. Some people exited, some people bought, and the market's a bit kind of like, well, what are we doing now? And then in October, it ultimately has the correction. It could happen, but, I'd like to think that September is really where, we kind of need to see that correction. Nevertheless, let's just see how it ultimately plays out. Adidas continuing to go sideways here. The megaphone pattern is still intact, or a diamond pattern now, potentially, if it starts to produce higher lows and lower highs. We'll see. Meta, just struggling along here. It's got that that strong resistance area there, but a similar pattern here, a higher low. We've got Morgan Stanley producing a potential swing low. Also a little bit of a diamond shaped pattern here. So we've got high highs, lower lows, lower highs, high lows. You're kind of forming a little bit of that pattern in there. So we'll see what happens with that. We've got NVIDIA. So NVIDIA, I wrote an article about this where I was looking for a correction down here. We did have this correction the week last month, but I was looking for a bit of a deeper correction here. We've got a higher low happening. We'll see. Otherwise, this is it. We've had that correction to the $94 area, and then we expect it to hit up from where it is now. Netflix, kids next door screaming. They've got an inflatable castle. There's obviously a kids party happening. Anyway, here we've got this correction, nice bullish candle. This should be a continuation candle. Market is not overextended on the monthly. So Netflix is in really, really good shape. It's battling with a previous key level, so I understand that, but it's not overextended in any way. So it's not, I think basically Netflix is really good value, technically speaking. It's not undersold, it's not overbought, it's looking really good. PayPal continues to push a little bit higher. It's broken outside of its range here. It's got to stay outside of the range. So in other words, it's a breakout. It's got to be a retest. What we need to see is a continuation from here to the upside. Will we see it? That is the question, but that's what we're looking for. Spotify just doing a really nice curve over here. We might see a bit of a correction. But overall, again, maintaining that bullishness. Don't forget, ladies and gentlemen, we are in a bull market. Okay, so... so Spider as well, looking good, testing that level of resistance and the 50 period on the moving average, but it looks nice and bullish. I expect this to ultimately continue to head higher. FedEx, also a little bit of a candle, so very similar pattern we've had here with a lower high and then a potential for a higher low. So that's what I think this week is ultimately going to lead up to. We've got Tesla still within its, long-term up or down, so no real change this week. Nothing significant. If it does, I will let you know. Here we've got that, again, we've got a slightly higher low here, level of resistance here. Is this level of resistance going to turn out to be too much? We're going to have to just find out for that. Vanguard otherwise looking nice and healthy. Disney, obviously, overall been looking bearish at the bottom of its range here, trying to produce a bit of a rebound there. It's got a slightly higher low, bullish engulfing candle. We could see a bit of an attempt to move up over the coming week. So lots of little things to look forward to there. Let's have a look at bonds. So bonds, as I said to you, I think we're in a new bull phase for bonds. They look really good. We now have an uptrend on the monthly. That is significant, ladies and gentlemen. We've got a beautiful uptrend here. Bonds are looking very, very nice and stable. So that's the 10-year T-note. Eurobond as well. I think we get rid of this. That's obviously been there for a while. We spoke about that being a potential move to the upside. If we had a breakout here, which we didn't get, really nice pullback and a bullish candle here. So, looking good. This is still range bound, so this will be a significant level here. It'll have to break above these highs, but it does look as though it is going to achieve that at some point in the coming month or two. So bonds looking really nice. Let's have a look at cryptos. So cryptos here, just look at their holding pattern here. So that is effectively what we call a triple bottom. For those of you who might not be familiar with it, that's just that's three rejections of a level of support. We still have lower highs coming into it. So believe it or not, the bears are still in control here, even though it is holding at that support level. We're producing a bit of a bullish candle here. So there's a couple of different ways you can look at it. We've had a retracement on the monthly, and we could see a continuation to the upside here, especially if the rest of the market also decides to take a move up from here. Often we can be very bullish from sort of late October, middle October through to December as we get that Christmas Santa Claus rally. Ethereum potentially testing these lows over here. That could turn out to be a bit of a double bottom. We'll see bullish divergence here. So very strong, equal lows, bullish divergence. There's a hint at a possible change in direction there. Let's see. Binance as well, trying to hold this level of support over here, trying to hold that level there. So that's kind of a three or four rejections there, but still got lower highs. So we really needed to break one of these highs to get more confidence that it's going to do that. Solana, same thing, same boat, lower highs, equal level of support that's holding. This could turn out to be a breakout to the downside if that level of support doesn't hold, because the bears are pushing and pushing and pushing and pushing. This little green box that I stuck in here for Cardano still kind of holding as an area. I should just adjust it to just include that area there, because that's really what it's doing. But I'd look and see if we're going to break out to the upside there. So there we go. So crypto sort of holding the line under pressure from the bears. We've got bonds that are slowly creeping to the upside. Bonds are nice and bullish for a while, but it makes sense with rate cuts coming in line. But to be fair, they've also not been getting love even when the rates were slightly lower, but it does look as though they're sort of getting them for now. And then, of course, with equities, there's lots of signs of bullish. Technically speaking, we're not through September yet, and therefore I'm still cautious. Silver looking more attractive to me than gold. And again, this week, the attention is going to be on that US dollar. What is going to happen with regards to that? It is due for a correction to the upside. So if there was no rate cuts on the horizon, I would be expecting the dollar to strengthen. But a rate cut would counter that, and so we're going to have to see how that plays out. All right, thank you. Have a great week. Remember to keep calm and carry on trading.